Hello everyone and welcome to my morning report analysis videos on Tuesday 26th of June with me, Richard Perry, market analyst at Hantec Markets. We've got a slight rebound across equity markets today, nothing too significant. I mean, there was a huge sell-off that we saw yesterday, really went quite strongly negative in Wall Street. It was sort of just continued concerns about trade tariffs and the White House administration is not really helping. Steve Mnuchin, the Treasury Secretary, suggesting that what wasn't just China that was going to be the focus of it; it was going to be all countries. I mean, Wall Street's never going to like that sort of language. Although Peter Navarro, the White House trade advisor, did try to sort of roll back a little bit on that sentiment and suggested that there was going to be no restrictions on foreign investment in US corporates, but still, I mean, the markets really were not all that happy yesterday. A slight recovery move today on these equities, but yeah, nothing too significant. And when I came in, the S&P 500 futures were up around about 0.2%. They're now just slightly down. So obviously, the initial sort of rebound momentum has not really followed through. And you see that S&P 500 last night 1.4% lower. Now this is still, you can see a safe haven bias. The yen continues to be outperforming, although the dollar is just mildly stronger across the board, across the other majors, and that's helped to stabilise the dollar, which has been in quite a sharp correction in the last few days. Question how much of a stabilisation that is on the dollar, though. You've got the Treasury yields, which have been falling away. Now you do have the 10-year Treasury yield trading at 2.89 today percent, so it is about sort of 3 or so basis points up from yesterday's low. However, look at this. You've got volatility, which spiked high yesterday. I mean, it's been around sort of these record, not record lows, but very subdued levels for the last few weeks, despite the fact that the trade tensions have been ramping up. But now we've seen the volatility really take off as the market fears really sort of escalated yesterday. And that still seems to be not something that's going away. It might sort of settle down maybe for today, but chances are that the next time someone opens their mouth from the White House, it's not going to be all that pretty for markets again. So it seems as though that this is a dead cat bounce at the moment, and whether it turns into anything more supportive, I'm not entirely convinced at the moment. Now, in terms of moves today on the data front, we've got the S&P 500 case-shiller, which is US house prices. You've got consumer confidence and the Richmond Fed. Where are they? There you go. And the Richmond Fed. Okay, so we're looking at case-shiller staying where it is, 6.8%. Richmond Fed will be interesting today because the Philly Fed last week, which was sharply lower than expected, really did start to trigger a bit of a dollar correction. So if the Richmond Fed also sort of comes back from that plus 16 level, which I think is expected on to be around about plus 15, if it misses that could be a bit of a sort of move to the downside. Consumer confidence is also interesting as well. It remains pretty elevated, very strong at 128. So again, if that sort of starts to miss to the downside, maybe that we could start to, or could see that dollar corrective move resume. So my chart today is involving the dollar Canadian. Now, what we have seen is the dollar Canadian trending higher in this uptrend channel for the past 2 months. Now, Friday, we saw this big bearish engulfing candle, big bearish key one-day reversal, and the market has taken that since then and just consolidated. Now what we've seen is this key one-day reversal has come as the RSI hit over 70. It's now back below 70. Let me just zoom out to see what tends to happen in this sort of situation when it corrects back from 70. Well, we do tend to see that being a corrective signal, although it took a little bit of a while to get going there. But yeah, these RSI correction signals are do tend to be fairly reasonable in calling corrective moves. Stochastics crossover sell signal as well, not yet confirmed. I might add. But what I'd be saying is Friday's low of 32.50 area. I'd say that that is something to watch, because if it starts to move below that, that would suggest that there is sort of some sort of corrective momentum. And 31.25, I think, is a retreat level. 30.65 to 31.25, this sort of breakout level of support. I think you could easily see a correction back into that sort of area, still within the uptrend channel, still sort of basically just unwinding some of this overbought momentum. But I think a corrective move, certainly signalled by that bearish engulfing candle on Friday. Here we see the hourly chart, which is basically just consolidated really, but it has lost the upside momentum of this bull run. Interestingly, our MACD lines are around neutral. RSI now not able to get above 60. So yeah, I think it would be interesting to see how far this correction goes. Certainly if that 32.50 level of support that we saw on Friday, sorry, 32.60 level of support that we saw on Friday does break to the downside. So I wish you good luck in your trading today, and I'll speak to you later.